I understand that it's always important to talk about the classic tips, just start or use the power of compounding. But in this video, I have shared the real world lessons that really matter when investing in Germany. By the way, if you're new to the channel, my name is Ahsan. I'm a researcher and I help expats in Germany fix their finances. So, to get started, get an overview of what you can invest in. Germany doesn't make investing easy. Between the language barrier, local regulations, and the endless online noise, it's no wonder most people feel lost before they even start. You scroll through social media feed and everyone is shouting different things. Some say buy crypto, some say real estate is the only real wealth. Some say that bonds are back, get guaranteed result. Meanwhile, your older German colleagues are proudly showing you their Bausparvertrag. And you're wondering if that's a secret investment or just another word you haven't learned yet. So, yes, it's always easy to feel overwhelmed. That's why the smartest way to start isn't by picking what to buy, but by understanding what's even out there. So, in other words, get a simple overview of the main asset classes. You can skip to this timestamp if you don't want an overview, but here are the usual suspects. Stocks, shares of companies. They offer growth but fluctuate in value. ETFs and index funds, baskets of many stocks designed to track a market index like the S&P 500, DAX or MSCI World. They're simple, low cost and perfect for long-term investors, especially for beginners. Both stocks and ETFs have a capital gains tax of about 26.75% on realized gains. Bonds, essentially loans to governments or companies. With higher interest rates again, they are becoming more attractive, though they usually offer lower returns than the stock market over the long run. Real estate. Buying property can build wealth, but in Germany it's often expensive upfront and comes with taxes, maintenance costs, and paperwork. But it's still worth it once you have some experience. Commodities like gold are seen as safe havens, especially during inflation. But gold doesn't grow or pay interest. It just sits there preserving its value. Crypto. Highly volatile, high risk, but also high potential. Best treated as a small experimental part of your portfolio. However, in certain cases, you can sell both crypto and gold without paying any taxes on profits. Cash. Technically an asset class too. It gives you flexibility and safety, but loses purchasing power over time due to inflation. Once you see the full picture, your goal isn't to master all of them. Pick a few that you actually understand or find interesting and ignore the rest for the moment. You don't need to invest in everything just because others do. Personally, my recommendation would be to focus on ETFs or index funds. They are simple and low cost. It's still good to understand the other investing options. So when you hear about new trends like tokenized real estate or green bonds, you know where they actually fit. Choosing an investing app. One of the biggest reasons people never start is that they get stuck choosing an investing app or a broker. I get DMs all the time. Hey Essen, which broker should I use in Germany? Trade Republic or Scalable Capital? And I usually say, pick one, any decent one, and just start. Because honestly, most of the popular ones in Germany are regulated under BaFin. They all offer stocks and ETFs, and their differences are minimal for beginners. So if you wait 3 months comparing fees, that's 3 months of lost compounding growth. Even if you start with one and later decide you like another, it's not that big of a deal. In most cases, you can transfer your portfolio for free. Even then, here is a quick rule of thumb. Want something super simple and mobile? Try Scalable Capital and Trade Republic. Want an all-in-one bank plus broker combination? DKB and ING are great. Don't let the search for the perfect broker delay your first investment because there isn't one. Please hit the like button if you're getting value from this video and consider subscribing. Choosing the perfect stocks and ETFs. Okay, you've opened your broker account. Now comes the next common problem. Over-analyzing stocks and ETFs. Should I pick QQQ or SPY? Distributing or accumulating ETF? And suddenly you've got 17 tabs open, a spreadsheet, and it's all a huge headache. Honestly speaking, your strategy matters much more than the exact ETF. Unfortunately, if you live in Germany or anywhere in Europe, Those American index funds won't be available with most investing apps. I'll explain what's available in a bit, but before that, ask yourself, do you want to invest actively, picking stocks, or passively using index funds? If you pick the passive route, it can make things quite easy for you. Your only job now is to choose a simple, diversified index and stick to it. So just pick one that's over 100 million euros in size, low cost, and offered by a reputable issuer like iShares, Trackers, or Vanguard. That's it. For those who want European alternatives to QQQ and SPY, these can be some good options to look into. And if you want Sharia compliancy, these three ETFs are good starting point. You won't find the best, but you started and that's what counts. Losses are the rule, not the exception. This one's especially important in Germany, where people really don't like risk. If you've grown up with a scarcity mindset, watching your portfolio drop even 2% can feel very scary. But volatility isn't failure, it's the price of admission for long term returns. Markets go up and down constantly. One year plus 15%, the next minus 10%. That's how you end up with an average 6 to 7% per year over the decades. So when your portfolio turns red, take a breath and zoom out and remind yourself it is completely normal. In fact, learning to stay calm through the dips is your real investor skill. If you feel you are stuck in a scarcity mindset, check out the Expat Wealth Blueprint, where I teach you how to go from a scarcity mindset to a control mindset and take control of your finances as an expat in Germany. Experiment early when mistakes are cheap. You can read all the books or watch all the YouTube videos in the world, but you won't really know your risk tolerance until you feel it. Do you panic when your portfolio drops 2% or 15%? Or can you ignore the news and enjoy your weekend? You only find out by doing. That's why I recommend experimenting early. When your portfolio is small and mistakes are affordable. Curious about crypto, individual stocks, or even real estate ETFs? Fine. But set strict boundaries. When I started investing, I actually invested in individual stocks and made some bad decisions within the first month. I lost a few hundred euros, which was a big deal at that moment. But thankfully, I learned some good lessons from that experience. So maybe you can start with 90% in your main plan and 10% play money. If it goes wrong, you've learned something valuable without derailing your long term goals. Reduce background noise. Before, finding investing information in Germany was tough. Now, it's everywhere. And it's a new kind of problem. TikTok, YouTube, Reddit, everyone's got a hot take about the next crash or opportunity. But most of it is entertainment. Constantly checking financial news is like eating fast food for your brain. Tastes good but leaves you anxious. So the healthiest thing you can do is to tune out a bit. Check your portfolio once a day or once a week and focus on your plan, not the headlines. And always be skeptical, even of what you see on this channel. Ask yourself who benefits because conflict of interests are everywhere, even on YouTube. A fund manager saying tech is the future. He probably runs a tech fund. A gold dealer warning about the next crisis. He probably sells gold. Even I earn small commissions when you sign up through my links. I always mention it and it doesn't cost you anything extra. It really helps me keep producing videos like this consistently. So before you act on any advice, ask who's talking, how do they make money, and is this educational or promotional? Because at the end of the day, it's your money and no one will care more about it than you. Entrepreneurship is not investing. This one is especially confusing on social media. You'll see creators saying, I built passive income on Airbnb, side hustles, or trading. But if you're actively working on it, managing tenants, or checking charts daily, that's business, not investing. Investing is what happens while you sleep. Entrepreneurship can absolutely build wealth, but it's active and time consuming. Investing is passive and very boring. So don't feel pressured to build empires to be financially successful. Long term index fund investing is perfectly fine. But if you are interested in starting your own business in Germany or want to learn about the different types of businesses you can start, you can watch this video. And in this video, I share how to invest your first 100 euros